April. We kindly ask you to keep your videos and your mics off. Would have liked this to be a bit more interactive, but given the number of people that are joining, that makes it a bit difficult. So we apologize for asking you to keep your videos and mics off. We are also inviting you to send us your questions. You will find in the chat panel on the right-hand side of your screens, you will see there a link. If you click that link, it will take you to a Google form where you can send us your questions, and we can then address them as we go along or towards the end of our webinar. As you can see, you are not allowed to record the webinar. This will be recorded from our end, and we will make this available in due course as well for anybody who did not have time to join us this afternoon. And we will ensure that we will protect your any GDPR concerns that you might have in this regard. So I think we're good to go. Before we start, I wish to say a couple of thank yous to people who have been extremely key in organizing this. Definitely Maria and Jessica, who are part of the team. There is also Steve Gingell, one of my partners, who will be covering some of the material that we wish to discuss with you as well later on. We might actually be joined as well later on with another colleague of ours, Roberta, a senior manager in our tech service line. Roberta, I understand, at least we're informed just before we came into the webinar, that she was actually attending an information session provided by Malta Enterprise. So we might have her join the call later on to provide us with some updates that we, not even Steve or I, are aware of at this point in time. So we will share that as soon as Roberta is able to join the call, if she makes it on time. So I think we're good to go. In the first part of this webinar, we are going to have a brief look at the tax incentives. Okay, what are the tax elements? Just if you can go on the next slide, please. What we're going to do is we're going to have a look at what are the initiatives announced by government, and then also on which the Commissioner for Revenue has provided some information in respect of the possibility to defer some of the tax payments that are due in these 2 months. Essentially, the idea is that tax payments, or a number of tax payments that are due in March and April, the authorities are authorizing that in certain circumstances, not in all, but in certain circumstances, certain tax payments due in March and April can be postponed. This is not a cancellation of these amounts due, but a mere deferral, and we will speak of to what extent these are deferred. And we are not speaking of all the tax that might be due for payment in March and April. There are only certain payments for which this deferment actually qualifies. Next slide, Jessica, please. Okay, yes, next one. So if you look at the left-hand side of this slide, the payments that have been specifically listed as qualifying for deferment are provisional tax payments, that is payments that would typically fall due by the end of April. There are also employee-related taxes that would be due in March and April of this year, and also VAT due, typically due on the 15th March and the 15th April of this year. Some comments on that. So if you look at employee taxes, for example, you are looking at the at the payroll, the taxes that were typically due in respect of the payroll for February, because the deadline for the payment of FSS, Social Security and maternity fund contributions would be due by the end of the following month, and therefore the expectation is that the amount due would be that in respect of the payroll due in February, and also therefore for the payroll due in March. The provision tax payment is that due in April. For December year-end companies, this would be the smallest provision tax amount due, because it represents 20% of the benchmark. Nevertheless, this is being agreed to have this actually postponed. There are a number of taxes that would typically fall due for payment in these 2 months, in March and April. We are hinting at some of them in the right-hand side of the screen that do not make it to the list, okay? Typically, any company tax that is due by the end of March or by the end of April, that is for companies that do not have a December year-end, but would have typically a year-end which closes in March or earlier, or earlier in the year in 2019. Those tax payments, the settlement tax, as we typically refer to it, is due by the end of March or by the end of April. But in that case, there is no indication of deferral of these amounts. The same goes for the 15% final tax on rental income. That is also not being deferred, and we understand that the reasoning why this is being done is that this refers to income and profits earned in the previous year, and therefore at a time when the circumstances in which we are undertaking today did not exist, and therefore businesses are expected to have funds to be able to settle these specific amounts. There could be other payments that are due and that possibly might not be covered. I don't know, withholding tax payments, for example, could be still relevant in the circumstances. The other crucial point is that the deferment is only of the payment. So far, there is no reference at all to the possibility or to any extension at all in respect of the deferment of the filing of any tax forms. So with respect to any compliance obligations involving the submission of VAT returns, tax returns, and the like, unless these are specifically announced, then these are not applicable, and therefore these forms still need to be submitted. So for example, although VAT payments for March and April can be deferred, the VAT returns themselves, so the submission of the VAT returns showing the amount due, is not being deferred, is not being extended, and therefore the deadlines, the relative deadlines, remain what they are today according to law. Going on to the next slide. There are also the guidance also presents who is eligible and who is not eligible in terms of this deferment. The way the guidance has been issued refers to entities and self-employed persons who have suffered a significant downturn in turnover. There has been some very recent
unfortunately, someone muted David.
Dave, you're on mute.
Okay. Thank you for notifying me, Roberta, Steve. Just to recap, hopefully you didn't miss much of that. The revenue has, over the last day or so, updated its guidance in respect of what it means for somebody to have had a significant downturn in turnover. this term is required for somebody to be eligible to be able to defer the tax payments, as we were explaining before. The guidance that has been issued actually refer to the requirement to have a drop of around at least 25% in the amount of sales or turnover of that particular entity or business. So the 25% threshold seems to be applied in this way. There seems to be from the guidance a bit of even flexibility as to how the 25% is to be calculated. We are seeing from our interactions with our clients that it could be that between January and March, if you look at the whole of January and March, because, for example, in the manufacturing industry, there is still a pipeline of orders, or you are still dealing with a pipeline of orders that you have received before the outbreak of the coronavirus, then there is still quite a bit of turnover that you are still managing even during to some extent March as well. But it is expected, because one is already seeing that pipeline of work actually reducing, that in the course of April, May, and so on and so forth, that the downturn in turnover will happen in the coming months rather in the first 2 or 3 months of the year. And the guidance that has been issued, that has been updated, actually does factor this in. So the idea is that the 25% reduction does not necessarily have to be calculated in the first 3 months of the year, but that at least you need to include March in the 3 months being calculated, and the March being at least either the first of the 3 months or the second of the 3 months. Okay, so basically you could have still a benchmark of 3 months being calculated, but not necessarily the first 3 months of the year. And I think that this is a more reasonable assessment that one can make in the circumstances. Of course, because we are looking at what is the expected level of turnover, and we are looking, so we might have a tax payment due in March, but we are looking at our expected turnover coming in the next 1 or 2 months, and therefore invariably the calculation has to be done on the basis of estimates. And there is a requirement to retain those estimates, okay, so that if there is any comeback from the revenue in terms of wanting to confirm that an enterprise was actually entitled to defer the payment of taxes, then one would be able to show on the basis of what that estimate was actually undertaken. But I think this was a very important clarification from the revenue side, and also the introduction of a bit of flexibility in terms of how one calculates the downturn in turnover with 25%. The guidance also provides for enterprises and entities that will not be eligible for the deferment of the payment of the tax, and in that case, if these enterprises have been defaulting on their compliance obligations, both from income tax and VAT purposes, then in that case, these entities will not be entitled to defer these tax payments. There is an application form already out, and one can file this application form to notify the revenue that you would like to actually defer the tax payments. There is an element of flexibility of who files that form. The entity itself can file the form, the tax practitioner can file the form as well, but there is also a deadline for submitting the form, and that deadline so far is the 15th April 2020. So anybody who wants to defer any of the mentioned tax payments would need to submit this form before that time. Steve, I don't know if you want to take on the wage supplement initiatives from here.
Yes, happy to, Dave. Just there are some questions also coming in on the link that Roberta sent, and one of them is actually in relation to reductions of provisional tax for the year. Just to clarify one point, because sometimes this is overlooked. So provisional tax is actually payable in 3 installments, as many people are aware. It's paid in April. It's paid at the end of at the end of April, at the end of August, and at the end of December, or towards the end of December. There is the facility, as it has always been in the legislation, for a taxpayer to actually request a reduction in the amount of provisional tax that is paid, on the basis that for that particular year, the expectation is that the profit is going to be lower. So there may be several taxpayers during the year that are already expecting for 2020 to be a year where their profits and therefore the tax payable is going to be lower than for 2019. That a PT reduction can be filed, but as the law says it, as the law currently is, the reduction starts to apply from the last payment. So you'll actually first start to reduce your payment that is due in December. If then that comes down to 0, you'll reduce for August and then you'll reduce for April. So in reality, what the deferral is doing is actually delaying the amount of tax that you would be due to pay for your April payment to some future period. But of course, there remains that facility to actually still request a PT reduction, because the overall amount of tax expected to be paid for the year is going to be lower, which will start to apply from December going backwards.
Yes, Steve, I think that is right. So in the circumstances, just to apply what Steve said, in the circumstances, so in terms of the provisions today, if the legal provisions today, if the expectation, if a business expectation is that one is going to have only a 20% of the previous year's tax to pay for the whole of the year, then in terms of how the rules are set out today, then you are obliged to pay the whole of the 20% in terms of the PT installment for April, and then file a PT reduction form for the August and December installment. So it is, to some extent, the way the law is worded is unfortunately actually making the payment of the tax slightly faster, and therefore even more crucial for one to apply for the deferment that has been granted by the authorities.
So moving on to the wage supplement that was announced earlier this week. Essentially, this is a measure which is still developing. So there's still information that we're waiting for, information that is coming out. Hopefully, there'll be some clarifications that Roberta would be able to share. So this is really the current state of play that we have at the moment. So just to summarize what the measure is, what the government has done is essentially it has tried to categorize all economic sectors into 3 buckets. There are those economic sectors that have been identified as being the most severely hit by the current COVID situation. There are those that are hit, but to a lesser extent, and then there is the remaining part of the economy, which, although is obviously being hit, are not really the subject of this particular measure. The sectors that have been hit are actually appearing on screen in our slides. There is a very lengthy list that can actually be accessed from the website of Moat Enterprise. So Moat Enterprise have a dedicated website, and we are aware that list is consistently being updated. The list is actually identified according to the NACE codes of the economic sectors, and obviously over there are the obvious ones. So the tourism industry, for example, accommodation, tour operators, travel agencies. There are also others that are less obvious, such as, for example, recruitment agencies and whatnot. The list is much more detailed than you can see over there. So you have actually got to go into the list and see whether the specific NACE code applies to that particular industry. For those industries that have been severely hit, so those falling within the highly hit sectors, there's essentially been a measure which consists of government financing up to €800 per month of full-time employees working with that business that falls within that economic sector. So for every full-time employee that is working in that economic sector, government is going to be funding €800 of salary per month. For part-timers that are working in that economic sector, the amount of the amount that government will be funding will be €500 per month, but will be prorated according to the actual number of according to the number of hours that employee actually works. But the maximum that a part-timer will take, so to speak, is €500 per month. The employers over there have a commitment that if you have employees that are earning more than €800 per month, then the employees will still continue to meet the extra monthly salary of those employees. There seems to be sort of a commitment to meet up to another €400, and then essentially from the information that we have available, and even from what the Prime Minister actually announced during the press conference, there is a sort of an urge for employees and employers, if you have a salary above €1,200 for employees, to be flexible with their employees. But there isn't a specific rule that applies there. Only that sort of that an employee and an employer come to some type of understanding as to what level of salary will continue to be met above the €1,200 mark. For those employees that do fall within the €800 mark and the €1,200 mark, or in excess that fall within that €1,200 mark, the employer seems to be making a commitment that he or she will be able to pay that salary. That said, there is also, however, that if you do have an employee or an employer rather that is unable to fund the excess amount above the €800 mark, above that part which government said will be funding himself, then there is the need to involve the Department of Industrial and Employer Relations to negotiate some sort of reasonable settlement as to how the salaries will be funded. For those sectors that are less critically hit, there is a commitment by government to be funding 1 day's worth of salary per week, essentially, based always on that €800. So if you have a full-timer that is working in a less critically hit sector, then effectively government will be paying 1/5 of that employee's salary, which comes down to an effective financing of €100 per week. There is, however, on Malta Enterprises end, there seems to be a flexibility of Malta Enterprise that on a case-by-case basis, if you fall within an economic sector that is identified as less critically hit, that Malta Enterprise has the authority to increase that benefit to 2 days per week. So, but that seems to be something that will be done on a case-by-case basis. For businesses that are operating in Gozo, because they have been identified that they are being more severely hit than businesses that are operating in Malta, because there is that double level of insularity for businesses being based in Gozo, automatically that is going to be a 2-day salary that is going to be funded. So effectively, they will be entitled to 2/5 of the €800 in the case of full-timers and 2/5 of €500 in the case of part-timers. The measures I've been speaking about I've been speaking about employees, but they apply to self-employed as well. So if you are a self-employed person working in these sectors, then you are entitled to the same level of benefits as an employee. With one additional benefit, if you are self-employed who is himself employing individuals, in that case, you actually get one extra day of benefit. Again, this is always for those individuals that are working within those sectors that have been identified as less critically hit. If you are operating in a sector that falls within those that have been hit to the maximum extent, then it is €800 for all full-timers and €500 prorated, and then for all part-timers. The government will be not paying the employees directly. So actually what has also come out of the press conference is that government will actually be reimbursing employers, and therefore employers will need to be paying the salaries directly themselves. One thing that I would like to add on to this is that the applications are going to be opened sometime next week. We understand this might be Monday, but there won't be a limit as to when the applications are actually filed. I'm actually being told that there is Roberta on the call, and Roberta is actually one of our senior managers who's attended the webinar that has just been given by Malta Enterprise. And I'm being told that I think there are some updates and some clarifications on the application of this measure. Rob, are you online?
Hi, Steve. Yes, I've just been on the Malta Enterprise webinar. There were some clarifications and updates on the wage supplement in terms of the mechanics, who is and also the application process. Basically, there were some questions on the 800, whether this is gross of NI or whether this will be paid net of NI. Malta Enterprise clarified that the payment of the 800 will include also the NI, so essentially the Social Security contribution will have to be deducted from the 800. However, it has been stated that this 800 is going to be exempt, but we need a bit of more clarity on this. And for this purpose, guidance has been given in terms of recording of the payment in the payroll system to disclose it as being a payment of a COVID supplement. So it's important that in terms of payroll, this is not being recorded as a salary. As already mentioned in the guidelines, and they have reiterated it, it is important that to inform the employees that the payment is going to be made to the employer, and then it is the employer that will have to pass it over to the employee. And there are also a number of conditions that are attached for the wage supplement to be applicable. Essentially, what are these conditions? It has been clarified that it is important that the employee must be working. So no wage supplement will be given where the employee is on unpaid leave or forced leave, or is working on a reduced working schedule, say from a 5-day week, it has been reduced to 4. Even if there has been some termination for the supplement to kick in, the employers must again employ back the employees with retrospective effect. So this is a very important communication that Malta Enterprise wanted to pass over. In terms of who is eligible, there was a bit of concern because the lists are not exhaustive. And in fact, it was clarified that these are draft, they are still being finalized. However, they are aware that there may be a number of taxpayers who should be eligible either to their ancillary activities or were not included by mistake in the list. and the application should give the flexibility to disclose, to make an application, and allows for the applicant to include a justification for applying for the wage supplement. So even though a taxpayer may not be specifically included in either of the annexes found in the COVID-19 Malta Enterprise website, the taxpayer can nonetheless still apply through documenting the appropriate justification why they are claiming the supplement. There were also a number of questions, Steve, which were raised regarding pensioners, persons on reduced hours, part-time workers, and casual workers. In connection to this, Malta Enterprise clarified that pensioners will not be eligible to the wage supplement. Persons on reduced hours will be deemed as full-timers. A person who has a main full-time employment and works on a part-time basis, a person who is on a full-time, working on a full-time basis and has a part-time work will only receive wage supplement on his or her main source of income. There was also a clarification on casual workers. How are we going to establish whether the casual workers are going to be treated as full-timers or part-timers? It appears that from a practical perspective, they will be looking at the working conditions which were applicable during the months of January and February. So if we have, say, myself have been working in January and February as a full-timer, then I shall be treated for the purpose of the COVID-19 employment supplement as a full-timer. If, on the other hand, during the January and February, which are being taken as the benchmark months, I have been working less than 20 hours in a week, then I will be treated as a part-timer. There was also an intervention from Marvin Gertie. In this respect, there was a question, will businesses having taxes in arrears be eligible for the wage supplement? As you know, in the case of the tax deferral scheme, if you are not in line with the taxes, you cannot apply. Marvin Gertie, the Commissioner for Revenue, informed us that this is still subject to discussion and no final decision has been made. So whilst there is a definitive direction in terms of the deferral tax scheme, there is none for the time being with respect of this employment supplement. Moving on to the application process, Steve, this will be live on Monday. They encouraged everyone not to panic. It may not necessarily be available from 7 a.m. So it will kick in on Monday. Yes, there will be no deadline, so please reassure everyone that there will be no specific deadline. It will not be a 24-hour thing. So if you don't manage to apply on a Monday, this coming Monday, there is no alarm. They know that there may be delays, even due to the fact that this has to be done remotely online. There has been, however, an indication, one question that has been put forward. This is the timeline within which one should expect to receive then the supplement once that the application would have been made. The indications are that as soon as the application would have gone through and they managed to review it and everything, the supplement payment should be paid within 15 days. So this is so far as we have updated updates in terms of the wage supplement. There has also been some clarification on the tax deferral scheme, if I can share also with you. With respect to the tax deferral scheme, it has been reconfirmed by the Commissioner for Revenue, by Marvin, that there will definitely be no extensions or deferrals whatsoever for the TA22, TA24 of the rent payment coming due in April. These are due and have to be paid. So there will definitely be no extension.
So this, Rob, this is referring specifically to the 15% on rental income and the 15% on part-time work.
Yes, Steve. There is also an important message that Marvin wanted to pass over. Basically, if we have taxpayers who do not have their taxes in line by 31st December 2019, but it is the taxpayer has only one default. So he does not have a 3-year history of defaults. Then in that case, that person will not be disqualified from applying to the tax deferral scheme. So essentially, the guidelines are clear, but naturally, where there is a genuine case where you have a taxpayer who has only one default and has a history profile of payment always in line, whatever, that will definitely be taken into consideration, and the deferral will be taken into account to be conceded to the taxpayer.
Okay, Roberta. Sorry, Rob, continue. Sorry.
Just one final comment to conclude. There may be taxpayers, David, who may be paying their taxes on the basis of an agreement, paying by installments. That Marvin also clarified that will not disqualify taxpayers from being eligible for the tax deferral scheme.
Okay, thanks, Roberta, for that. I think it has supplemented quite a bit what Steve and I knew and what we were saying. Steve, if I had to comment on that hot of the press news, I think it's all or mostly in the lines of the comments we have been receiving from clients over the last couple of days in terms of sometimes you look at the guidance, how rigid it is. So you have those sectors and then so if I don't fall in that sector, but my client base is entirely in that sector. So if I don't know, hospitality is in the critical sector, highly critical sector. But my client is in the hospitality industry, but I'm not in the hospitality industry myself. So technically, I don't fall as being one of the critical sectors, but my turnover is zero because none of the hotels that are my clients are buying anything from me at the moment. So shouldn't I also be on that critical list? And it seems from, if I understood Roberta well, that these can be considered on a case-by-case basis by Malta Enterprise, and the form to be launched next week should be catering for this as well, which I think is good news.
Yes, definitely, I confirm, David.
That's good as well. I think it's good news as well in terms of the any defaulters of income tax and VAT matters as of December 19. It would have been really unlucky if you had been defaulting by mistake, for example, a one-off default, but because it happens to have happened before the December 19 deadline, then you would be ineligible for any tax deferments applying under the new guidance. So I think that is also a positive development in my mind. Steve, I don't know if you have views on this.
Yes, very, very much so. I'm just also at the same time seeing some of the questions that are coming in, and perhaps we can address some of them. There is a question which seems to be coming up a bit regularly is in relation to the wage supplement that will be payable for employees in less critically hit sectors. Essentially, if you are working in a less critically hit sector, you are effectively entitled to 1 day's salary per week. So it is essentially 1/5, if you're a full-timer, 1/5 of the €800. So essentially there we're speaking about €160, for which Malta Enterprise may increase that to 2 days. So to 300 and up to €320 on a case-by-case basis, according, I guess, to the impact that COVID is having on that less critically hit industry. And as David just said, it isn't necessarily those industries that are specifically listed on the website, but if there is a situation where using David's example, all of my clients happen to be in the hospitality industry, and therefore I am significantly hit, but my NACE code is not listed there, then potentially in that situation, I can still also apply.
There is one interesting question as well, and to be fair, I was expecting this to happen at some point. As we are showing in the next slide, Jessica, please, there is the applications likely to be referring to both. I think that is at least how it's happening for the tax deferral situation, both to the NACE code and to the VAT registration number of businesses. Now, my understanding is that when somebody applies for a VAT registration, that to date the VAT authorities have been assigning a NACE code to that VAT registration number, and that on the basis of the description provided in the VAT registration details. The bit of downside, at least from my experience, is that the taxable person himself has not been notified historically of what that NACE code is, and therefore you wouldn't be aware exactly what that NACE code is until something like this happens. The current system, if you actually apply online, then there is a system where you yourself are choosing the NACE code, and therefore there's an element of control. The expectation here, as one of the questions put forward, is yes, you might have a situation where there might not have been too much clarity when the VAT authorities assigned the NACE code, or it could be that the operations of the enterprise actually changed over time, and whereas a particular NACE code was applicable on registration today, that business has a new NACE code applicable to its operations, and therefore there might be some mismatch between the VAT number that an enterprise has and its NACE code as applicable to its operations. Presumably, what I would conclude, even from what I heard Roberta sharing with us, is that although the primary benchmark is going to be the NACE code itself, there is also going to be the possibility of one making a request beyond the NACE code classification. So if you can show that despite not falling under the critical heading, if you had a critical impact on your business, then you still qualify, you will be assessed, and you might still qualify for this incentive, and therefore, in my mind, that should also include the situations where there is a bit of a mismatch between the NACE code and the VAT number as residing in the records of the VAT authorities at this point in time. So I think what Roberta was saying actually helps to cover, hopefully, this particular point as well. Okay, Steve, I don't know if you have some final points on this particular measure, or there are any other questions you want to address now?
No, I think what we'll do is, because there are a lot of questions coming in, let's collate, and we'll have some moderators that are combining similar questions together. I will come back to them towards the end of the webinar to deal with them, Dave. So perhaps we can move on to the next point as well.
Okay, there are a couple of other measures which probably now have been there for over a week, I would say. So they are part of the very first measures that were launched, and therefore, to some extent, at least from the amount of queries I have myself been receiving from clients over the last couple of days, they were not the hottest of topics in the conversations that I have been having with my own clients. The first of these is the liquidity measure. So essentially, what government has done is essentially pushed or provided assistance to the commercial banks to actually be more flexible in the type of liquidity that they can actually grant to their customers. The next slide, Jessica, please. essentially, there is a broad outline on the type of liquidity that the banks can provide. It is, however, very, very clear that government itself or the Malta Development Bank is not directly involved in the dealing with the customer. So the way we are understanding this is operating is that that the customer would go to its normal bank, to the bank that where it already has facilities or where it already has accounts, where there is already a business relationship, and requests funding. Obviously, that would be in line with the assessment that bank would typically undertake. It would also, of course, look at the risk factors of the funding being requested and the purpose and so on and so forth. And the normal assessment undertaken by the bank will be undertaken in this case as well. What the bank will then do, even in terms of guidance that it is receiving itself, and which of course might not be public, then it will have some more flexibility in terms of the guarantees that it can give on the back of its own guarantees that is being given, and so on and so forth. So the system is entirely being handled by the banks themselves. And therefore, what is happening in the back end in terms of the additional facilities and guarantees that the banks can obtain and therefore pass on to their own customers is something that is entirely administered by the commercial banks themselves. And therefore, the normal process for requesting a bank loan and stuff like that would be done in the normal way between the customer and the bank in question. Okay. Again, here what you are listing is a number of opportunities of how this increase, this available liquidity can actually work out. But as I said, the actual arrangement is not a fixed arrangement, so it's not like what we have been hearing on the wage supplement or the tax deferment. It is really a one-to-one arrangement that the particular customer needs to undertake with his own bank. And therefore, this has to be a discussion, a confirmation on a one-to-one basis that each business or each person will need to undertake with the bank providing that facility. Steve, social measures?
Yes, these are also some measures that have been announced some what feels like ages ago, to be honest. Because I forget that in certain cases it's only been a few days that certain measures have been announced. These are a list of three what are being termed as social measures. So essentially they are measures that even administratively they are being administered not by Malta Enterprise, but they're being administered by the Department of Social Security. And indeed, in order to apply for these measures, one can go onto the website of the Department of Social Security. The first of these measures is actually for parents who cannot go out to work, or parents, meaning even single parents. So there is a condition that if you cannot go out to work, obviously, where you have children who are of school age, who are under the age of 16, and therefore because the schools are closed, those children are staying home. And they cannot make use of teleworking facilities, insofar that the parents both work, or the single parent works with the private sector, then those parents are entitled to a supplement. Essentially, the supplement is different depending on whether you work on a full-time basis or a part-time basis. Approximately, the level of the benefit is just under €800 per month. There is a slight increase even in terms of the children's allowance. that is not being marked there. So if you are entitled to a children's allowance, there is also a slight adjustment in the amount of the children's allowance that you can claim. And this is basically being applied retrospectively from the 9th of March. So essentially, if you could not go to work from the 9th of March, effectively, it's when the day that the schools closed, then you are entitled to apply for this benefit. And there's a specific application, a very straightforward application that you can use online. The second benefit is addressed to persons, to individuals who have a disability, and the same. It's where you have a person that has a disability, so a person essentially that is in possession of a special ID number or an EU disability card issued by the Commission of the Rights of Persons with a Disability, who, due to their disability, have been medically advised to stay home, and have been medically advised to stay home since the 9th of March. And indeed, even with yesterday's announcement, it is being pushed very much by the health authorities, and where you cannot be working from home again. So this is covering those individuals who are in a situation that cannot be teleworking effectively. So again, over there, the amount of the benefit is the same. So it's €166 per week if you are working full-time, €103 per week if you are working part-time. Again, pretty much being linked into the €800 per month and the €500 per month that we mentioned earlier. The third and final social measure is the unemployment benefit, essentially. So, and over here, this is automatic in a sense. So if your employment has been terminated after the 8th of March 2020, and it's been terminated effectively as a result of the ongoing situation, then automatically the unemployment benefit is increased to, again, the €166 per week if you are full-time, €103 per week if you are part-time. There is no specific application for this. The requirement here is that you are registered as being unemployed with Jobs Plus, and automatically, once you've been registered as unemployed with Jobs Plus, then you are entitled to this benefit as well. There is also linked to this situations where you have or you are in possession of rent subsidy from the government. There is meant to be an increase in the level of the rent subsidy. Up until now, we are not aware of there being any specific application form for this, and indeed, it's one of the measures that was originally announced, but we're still yet waiting for details on this, and even from our research, there doesn't seem to have been significant movement on this point. Again, Rob, on this, I don't think Malta Enterprise, it was the subject of the social measures were the subject of there being the addressed in the webinar. I don't know if something specific was addressed in the webinar of Malta Enterprise.
Hi, Steve. Basically, some comments that were passed was in respect of the 350 grant paid for the quarantine leave. The clarification was mainly with respect to the fact whether the measures that yesterday were announced by Chris Fern were effectively going to be covered by the payment of this grant. Malta Enterprise clarified that the payment of the 350 is a separate measure, and a set of new measures will be in these coming hours. So today we should be on the lookout for the publishing of these new measures, which will kick in effectively from tomorrow.
Okay, thanks.
So basically, and this was the next measure that we're going to be discussing. That is the grant for quarantine leave. Actually, thanks Roberta for explaining that. I was expecting a few queries on that even today because of the announcements made yesterday by Minister Fern. So basically, the 350 euro grant remains effectively as it has been today. It is only applicable to full-time employees. It is a one-off lump sum payment as well, and it is not, it seems, in any way linked with the wage supplement as explained quite comprehensively by Steve. So it is a totally separate matter, nothing to do with it, and it is paid actually separately to the employer as well. So I think not much else to say in that regard. Thanks, Roberta, for that update.
Yeah, and this is linked, Dave, right, to the fact that in terms of, as we saw on yesterday's webinar, that employees that have been placed in mandatory quarantine are entitled to effectively 2 weeks supplementary special leave to cover that. So the grant is really intended to compensate the employers partially for obviously losing 2 weeks worth of employees work. Like this measure, the next measure, which deals with teleworking, is also addressed to employers. Okay, so it is a grant that is given to employers. Essentially, what this grant does is that where you have an employer that has had to invest in technology that enables his or her employees, its employees, to telework since the 15th of February, then essentially part of those eligible costs are actually going to be subsidized by the government. Essentially, what is treated as being costs of an eligible nature are set out in guidelines that Malta Enterprise have on their website. It basically covers the purchasing or leasing of computer hardware or software, which are considered to be portable. So the most obvious one being, for example, laptops or portable monitors or something like that, and as well as the setting up of connectivity software. So you might need to have some software that will allow, for example, your IT people to access the laptops remotely of their staff. It also covers communication solutions that allows different users to connect to their place of work, such as, for example, VPNs, point-to-point connections, and whatnot. So that capital expenditure, so to speak, government will be covering 45% of the eligible costs, and however, it is capped at €500 per teleworking agreement, meaning essentially €500 per employee that for which this teleworking agreement is being given, but capped on an undertaking base of €4,000 per undertaking. So essentially €4,000 per company, so to speak. It doesn't cover situations where you already had employees that were teleworking before the 15th of Feb. So if you were already operating in a business where that employee was, in terms of the contract of that employee, already teleworking, then those employees are not covered by this benefit, or rather the employers of those employees are not covered by this benefit. So it is really in situations where employers have moved to a teleworking arrangement really as a result of the current situation. We've had a question that came in earlier as what if you had an employee, for example, that was already doing some teleworking, that was already able to work from home, for example. Will that person be covered by this sort of arrangement? I think the prevalent view is it doesn't cover employees that happened to be able also to work from home, but are predominantly working from an office. But it is excluding those sorts of employees, which the standard is that you work from home. The standard is that you are on a teleworking arrangement. So it really is intended to cover the costs for those employers where employees are in reality office-based primarily, but really as a result of the current crisis have moved to a situation where they're not coming into the office any longer, but are actually working from home and covering the expenditure incurred for those employees from the 15th of February onwards. Sorry, Dave, go ahead.
No. Basically, I'm looking at the list of questions that are coming in, quite a few. Obviously, we have people trying to moderate them so that we can try to address ones which are really common. I picked up a few as well as you were speaking. Just to clarify, because I think sometimes trying to understand the basis of the measures being implemented, I think is helping us as well answer questions being put to us. So I think having heard the Prime Minister announcing the wage supplements earlier this week, what I was understanding, what I was taking from the statements being made is that the priority is to try to avoid as much as possible people being removed from employment. So the aid being given is there to incentivize employers to retain employees in their employment books. Okay, now they are being addressed as well to sectors that have been very severely hit and that therefore probably do not have any work for their employees to actually undertake. So if I link the two together, what I understand from that is that there are situations where an employer had a number of full-time employees before the crisis actually hit us. But because of the severe downturn in business, then this particular employer does not have any work for his employees actually to undertake. And he is now having to tell his workers, guys, you cannot be working 40 hours a week or more as you used to before, you're going to have to work less. Does this in its own right reduce the €800 grant per employee as described by Steve? I think the answer to that question should be no, because it is obvious that because of the downturn in business, then these employees don't have much to do. And therefore, you go to the place of work to do nothing. Probably the employer, in order even to protect the health of his own employees, is telling his employees, don't come to work, okay? But I don't think that merely telling your employees in the current circumstances, not as they were before the crisis actually hit, that they are working sort of reduced hours because there is no work to do. I don't think that in its own right should mean that enterprise or those employees should be getting less than €800 a month. I think that €800 should apply in the same way as the obligation for the employer to top that up with a further 400, despite the fact that on paper, these employees are working less than 40 hours a week. I think you arrive, at least I have arrived at that conclusion, having heard the Prime Minister speak last Tuesday and trying to piece everything together to make some logical sense out of this, out of what we are seeing. The other point as well, because probably Roberta might have been misheard, is that whoever prior to the crisis was on unpaid leave will not be eligible for the €800 a month. And Roberta, if I'm not addressing this correctly, then please do support me in this. So if you were on unpaid leave before the crisis, then the expectation is that nothing has changed with these measures. You are going to continue to be on unpaid leave even now. But if you are doing nothing now, as a consequence of the crisis, okay, so you were in full-time employment, you were not on unpaid leave and so on and so forth before, but you are now having very reduced hours, then that does not impact the €800 grant and the obligation of the employer to actually top that up at another 400. Roberta, I take it you confirm that.
Yes, David, that is also my understanding from the discussion of today. And I mean, the objective also is to ensure that the employees are as much as possible retained under the same conditions. That's basically the message that the enterprise wanted to pass as well.
Yes, one of the questions that is coming in is for example, how would a self-employed calculate his wage supplement since they do not have a salary? Over there, the answer is that you will get €800 per month. So if you are in a highly critical sector, then if you are self-employed and therefore you have a fluctuating revenue, the government will fund you a fixed €800. If you do employ people, excuse me, if you're self-employed and you do employ people, then you get an extra day's salary, so to speak. So if you are in a less critically hit sector, you are going to get 1 day's salary. If you are self-employed and employing individuals, you get an extra day's salary. One thing that also came in on this point is if you are self-employed and you are employing people and you are therefore entitled to the benefit, the self-employed person is entitled to the benefit, and his employees are entitled to the separate benefit. So if you are self-employed working in a highly critical sector, then you are entitled to the self-employed is entitled to the €800 per month, and his employees are also entitled to the €800 per month separately.
Thanks, Steve. I have also picked up a couple of other questions. There is a question on vacation leave. As far as I have made out, the wage supplement explained by Steve does not make any reference at all to what leave arrangement employers are undertaking with their employees. But again, I think I link this to what the Prime Minister was saying in the press conference on Tuesday. The crisis we are in is something that needs to be borne not only by government, not only by the employer, but by the employee as well. And therefore, there needs to be an appreciation on the part of employees that they need to be bearing part of this as well. Which means that, yes, if required, that during the period where there is a downturn in business and you are at home doing nothing, then the expectation is that at least part, if not all, of that is taken out of your vacation leave entitlement. And one cannot be expecting that hopefully when this is all over and everything returns to normal, then the whole of my leave entitlement will still be intact, and then I continue to put pressure on the business because I'm actually claiming my vacation leave at that point in time. So I think this is even part of ensuring that the burden is borne by all parties, but again, I repeat, the wage supplement does not consider this particular point. There is another question regarding VAT refunds due. Yes, there has been comments by the tax authorities that they will be undertaking to facilitate and to speed up refunds, particularly VAT refunds. This particular question is in respect of VAT refunds. In the course of my discussions with tax authorities over the last couple of days, one point that has been raised to me is that one reason why entities might not have been receiving refunds or might be receiving refunds slower than they would be expecting is that they have not notified the tax authorities of their bank details, their IBAN number, because refunds obviously are paid by bank transfer. So one piece of advice that I can share with those listening into this call is that if you are expecting any tax refunds, particularly VAT refunds, please ensure that you have shared your IBAN details with the VAT authorities because this could be one reason why it's taking you longer to actually receive those refunds. Have you picked up any other questions, Steve?
Yes. I'm just going through. Yes, there's one here which relates to the facilitating of teleworking activities. So the grant that will be given, is the grant eligible per company or per group? The rules, or rather the guidelines, talk about an undertaking. Now, typically when we talk about an undertaking refers to per company, per business. So my understanding is that it is done on a per company by company basis. But of course, that is just my view. Yes, there is, Dave, there is a request, or quite a few requests, to just give a little bit of detail on the 25% downturn, how that will be determined. Yes,
what I can do basically is read out from the guidance that the revenue have provided. Okay, so I'm going to read verbatim from the guidance, and then maybe discuss that exactly after. Without prejudice to the right of each enterprise to prove a significant downturn in turnover in its specific circumstances, a drop of circa 25% or more in sales registered would certainly satisfy this condition. This would be ascertained on the basis of a 3-month period in which March would be either the first or the second month, i.e. either from February to April or as from March to May 2020, as compared with the same period of 2019. Naturally, this would in part be based on estimates, but as long as such estimates are drawn up in a reasonable manner, then they should suffice. Enterprises claiming this benefit should keep records of these estimates. So I hope that is clearer, or a bit clearer than I explained it before. Essentially, what it is saying is that that you are looking at a 3-month test. And the 3 months must be including March, which is where the crisis was starting to hit, and effectively you are looking at a reduction in turnover of 25%. Just to tell you, we have been also, I have been very active, for example, with the Malta Institute of Accountants in terms of even suggesting other measures in terms of negotiating further deferments of tax payments, also because of the difficulty of undertaking tax compliance obligations. So because one is working remotely, then it's more difficult to compile VAT returns, for example, and so on and so forth. So it could be, and depending on how this crisis develops as well, whether it worsens, hopefully not, hopefully that the authorities might actually be a bit more flexible going forward as well. So my advice here is watch the space in my mind.
Just going through some additional questions. The wage supplement questions, related questions, are archiving hard and fast, and we must admit, obviously, this is still a developing area, so there are certain specific questions, of course, which it probably would be worthwhile taking offline. So I'd certainly encourage those individuals, those people that have posted questions which we haven't been able to answer your questions through this webinar, because we're trying to sort of get together the most common questions, that you do get in touch with us separately, and we'll be happy to deal with them. Of course, because we can't keep track of who's sending questions, of course, we'll also be happy to direct where our existing clients are posting questions that will get back to you separately as well, unless we've already addressed it through the webinar. So one question that we did receive is how will the €500 supplement for the part-timers be calculated? What we understood, or at least what I understood by this, is that the maximum that government will finance for a part-time employee, so an employee who was already in a part-time arrangement before the COVID crisis hit, will be €500. That will be the maximum, and then that will be prorated to take account of the number of hours that an individual was actually working, or how much his contract dictates he should work. One additional point relating to another question that we received, and I'm glad it's being asked, because I wanted to mention it earlier and I did not, is in relation to the teleworking aid, and there might also be other aid that falls in the same treatment as what I'm just going to mention. So the teleworking aid that is being given from a state aid perspective under what was called the de minimis aid. So in terms of EU law, the Maltese government is bound by EU rules on the state aid that it is able to give. So any subsidy effectively that any member state gives to a business needs to be covered by these rules. These rules essentially allow any member state, including the Maltese government, therefore, to give aid to any undertaking within certain thresholds, without seeking approval from the EU first and foremost. And this is essentially referred to as de minimis aid. We have a number of measures that have already been issued in terms of these de minimis aid rules. And essentially what those rules state is that if you have a government that gives aid to an undertaking of up to €200,000 over a rolling 3-year period, effectively, then that aid doesn't need to be notified a priori to the European Commission. And some of those measures, for example, include, say, the microcredit scheme, okay, that has been available for a number of years. The teleworking aid is also aid that is falling within the de minimis aid. So essentially, if you've already taken the microcredit, it might mean that the amount of aid that you are able to claim under the teleworking agreement aid might actually be capped, because you might have already utilized the amount of aid that is available to you because you've claimed other measures. That said, we are aware, and as well, this is a developing area, but in the last week and a half, that the European Commission and the Council of Ministers have actually approved specific thresholds that will apply for aid given as a result of the COVID crisis. So it might be that the teleworking aid might eventually move under this new framework that has just recently been approved. But for the time being, strictly speaking, that teleworking aid is governed by the de minimis aid, and therefore by the €200,000 cap that applies, and there must therefore be taken as part of any other aid that company might have claimed under any other existing measure.
Thank you, Steve, for that. In the interest of time, I think we need to close this webinar. I'm still looking at the list of questions, quite a long list, I must say. A number of them are in respect of that particular entities are not on the critical list or less critical list, as Roberta indicated. Although the list is very, very indicative, and I think one should go by it. It is not the closure. It is not the conclusion of who will be entitled to the aid that has been announced, as clearly advised by Multi Enterprise earlier today. So my advice on that is that let's wait a bit also for next week for the application form to be made available, and it seems very clear to me that Multi Enterprise are listening to what is being said to them in terms of ensuring that that proper alignment is done, so that the aid goes not only to the sectors that have been listed, but also potentially extended to other sectors that have also been severely hit, but have different NACE codes than those identified to date. I take this opportunity again to thank obviously Steve, who has co-hosted this webinar with me, Roberta as well for the invaluable intervention that she has provided us with as well, with that hot off the press information, and also Maria and Jessica for assisting with this webinar, and also our marketing and communications team that has brought this together in a very few days. Thank you. Have a good afternoon, and I wish you all a safe and peaceful weekend. Thank you very much.
Thank you.